Hey everybody, this is Jim at SP500chart.com. It's about 5:30 on September 22nd, 2014. Had to take one of my sons to work and do a few errands while my wife is vacationing with her sister in Hawaii. Good for her. Before we take a look at the chart, I need to remind you, as always, that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw these lines on charts, but you have to draw your own conclusions from your own research. And please make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look at what we saw today. Well, what we saw today further substantiates. I'm going to look on the positive side of things, on as far as what we see in the chart. Okay, I'm by nature. Let me digress just a second. I am by nature kind of a negative person, and that's just who I am. If I'm presented with the situation, the first thing I do is I look at it and I say to myself, where are the problems here? I'm that way in my business as a photographer. I am that way about a lot of things. But today I'm going to point out first the positive. And the positive is, with today's move under 2,000, I'm encouraged that at least the idea that this is our legitimate neckline seems to be further validated than what we had prior to today's action. So basically, this is what has happened. We broke out of this descending channel here that I believe we can rightly call a bull flag. When we broke out of it, we never got any kind of back test of this line. In fact, we never even really back tested the area of the breakout until, well, you could say maybe that little dip there on the 17th. But today just looks to me like our little rising channel's broken, and we're coming back down to test support. I don't think I'm going to read anything really wickedly bad into this at all. We're testing support. The market was down about 0.8% at the lowest part of the day. We still were not down a full 1%, and none of this, quite frankly, looks that troubling at this current point in time. Now, if we continue to sell off tomorrow, then I would look to this green line for support. But we may be finding support right here at the low of the day. And the reason I say that is this. If we look at the last 1, 2, 3 lows, you see that we come down, pause, move back up, come back down, up, back, then back down. We do a little wiggle, then we come back. Back when we did this on the 9th and the 10th, we hit support, did a little wiggle, then we came back up. On the 12th and the 15th, we came down, did a little wiggle, and then we came back up. And I know did a little wiggle is not a real fancy sounding technical analysis term, but really that's all I can say. I think I pointed out that if someone wanted to get real overly analytical about it, we could have called this a small inverted sort of head and shoulders pattern. Okay? And as we look at what we saw today near the bottom of the trading range, if we look at a 5-minute chart, see that? We came down, went sideways a bit, then we broke out and mounted a move back up. Here we came down. If we really take this apart, and let's do it, okay? I know this is just a 2-minute chart, and that can get a little dangerous to try to read too much into it. We came down, little bear flag, down a little bit more, dip, rally, dip, rally. And if you ask me, I think we could maybe draw a line here and say to ourselves, if we get over this top line right here, then that could very well be a short-term signal that we've made a short-term bottom and that we can expect a rally. Where would that rally go to? Well, looking at this chart, I think it's a pretty easy thing to see where one might expect a rally, and one might expect a rally to come back and backtest this broken support line. Especially given the fact that the S&P has been, in general terms, always willing, or at least for the past 5.5 years, willing to find any excuse for a rally. So let's see if tomorrow we break out of this little, almost a slightly downsloping flag. Let's see if we break out of this and we start to rally back up over 2,000 to give a shot at a couple of resistance lines. Again, we still have our neckline, and of course we have this little channel line. Either one of these could be calling out for a back test. I think the one that I would be more likely to expect a back test on, just in general, from charting expectations, would be this rising support line that broke today. Now, if we back out on a 30-minute chart, tell you what, let's do one more. Let's back out on a hourly chart. I'm going to get rid of my big oval here because we're talking about the possibility of this being an inverted head and shoulders pattern. With the move of this neckline, we now start our right shoulder here instead of here. So if we're looking for symmetry, I'll remind you that we had a double dip over here on the left shoulder that lasted a little bit more than 2.5 weeks. So far, we're about 2.5 weeks into what may end up proving to be a right shoulder. And if it is, maybe this is a little double dip. All I'm saying is this doesn't give me a tremendous amount of concern. We would expect resistance at the neckline. It would have been beautiful if we'd gapped up over that today and run to 2040, but obviously that didn't happen. So instead, we are left looking at the chart with further evidence that this is an important level of resistance, and also with the general outlook that backtesting either this line here or coming back down to this teal line would not be that unexpected. Now, I'll remind you, what is that teal line? Again, on an hourly chart, we had 1, 2, 3, 4 touches on this line before we formed the head of this potential inverted head and shoulders pattern. Since then, we've had 1 touch. Then we had a little period of a day and a fraction where we were underneath this line, and that is the line that we are now very close to. So this could also be a trend line where we find some support. Finally, one more thing. You'll remember at one point we were looking at the possibility of this being a small head and shoulders top. If we extend our neckline to the right just a bit, you can see that that also coincides with where we were very near, at least where we were very near to at the low of the day. So I'm looking at 1990 as a good spot to expect a bounce. And if that fails, then wherever we might tag this lower a broken resistance line, at which point let's keep our fingers crossed that we would get a good solid bounce and come back up from that. But right now, like I said, if we just look at this little this group of candles right here, it does not look like the kind of temporary pause that we've seen in the markets, like right here, or what we saw earlier in the day. This almost looks like, dare I say it, a very short-term working out of a bottom, similar to what we saw on the 4th and the 5th, the 9th and the 10th, and the 12th, 15th, and very early on the 16th. So let's see if it plays out that way. So, still looking at this as a potential inverted head and shoulders pattern. We just haven't gotten our breakout yet. Let's keep our fingers crossed that at some point, hopefully this week, we get that breakout that we're looking for over this neckline. So look, guys, thanks for watching. Thank you for your attention, and especially thank you for your very kind support. Take care.